There are millions of videos out there that explain what cryptocurrencies are, what blockchain is, so we're not going to be going into that in this video.
What we will be doing, however, is looking at cryptocurrency investing through an Irish lens, specifically for the Irish investor.
Yeah, so we'll be looking at what platforms to use, what is crypto, the basics of investing, research tips, and other stuff like that.
Things we're not going to do in this video.
Tell you what crypto is going to go to the moon, tell you what crypto is the next big thing and you don't want to miss, or anything like that really. And why are we not going to do that?
Well, first, we don't know what coin is going to go to the moon. Secondly, most of TikTok and YouTube is full with people telling you what they think is going to go to the moon, and frankly, they don't know either. And lastly, when a coin that started as a joke is worth more than $70 billion, you know things are going to be interesting.
You can use the timestamps below to jump to the section that you're most interested in.
And of course, if you liked the video and you want to see more detailed cryptocurrency videos, let us know in the comments, and of course, hit that like button. I'm Steve.
I'm Cian.
And this is The Learnings Report, a show where we make investing accessible and understandable for everyone.
This week, we're talking about cryptocurrency investing in Ireland.
So with that in mind, let's get it. So very briefly, what is a cryptocurrency? Cryptocurrency is a digital currency. But how is that different to a bank account or a credit card? So cryptocurrencies use decentralized control as opposed to centralized control like we would see with traditional financial institutions like a bank. In other words, there is no need for a trusted third party, such as a bank, to facilitate transactions between different people. Again, that's pretty high level, but it gives you the general idea. And how many cryptocurrencies are there? Well, as of January 2021, there are over 4,000, but by the time you watch this video, there could be likely a lot more, or maybe even zero. Bitcoin, of course, is the original cryptocurrency itself, which you're more than likely familiar with, but there are also what we call altcoins, and an altcoin is simply a coin that is not Bitcoin. So basically, all the rest of them. Some of the other coins you might be familiar with are Ethereum, XRP, Cardano, Doge, so there's plenty out there. A great resource for tracking the top cryptocurrencies by market cap or size is coinmarketcap.com. It updates in real time, has some really valuable information on each coin and token, and is a great point of reference when researching a coin.
So, where and how can I buy crypto? There are a number of ways, and similar to buying stocks, you're going to need a broker or an exchange. There are many crypto exchanges out there, but for the sake of this video and to keep it simple, we're going to be focused on Coinbase and Binance. Stockbrokers that we've covered in other videos, such as Revolut, eToro, DeGiro, do offer some forms of cryptocurrency investing. However, at the time of recording, these features are limited, hence why we want to recommend Binance and Coinbase.
It is worth noting that some of these brokers only offer cryptocurrency investing to what we call an ETN. And an ETN is an exchange traded note. We won't be going into too much detail on ETNs in this video, but essentially what it involves is investing in crypto through a regulated stock exchange and a regulated provider. This is more secure than an unregulated crypto exchange, as it allows you to invest in Bitcoin, for example, with governmental guarantees and more oversight. DeGiro and Interactive Brokers are just two brokers that offer cryptocurrency trading through an ETN. For transparency, I personally don't use ETNs when I'm investing in cryptocurrency. I just buy them directly through Coinbase or Binance, but that's just a personal thing. It's up to you.
For beginner investors, using your current stockbroker is probably the easiest way to start investing in cryptocurrencies. But just as a caveat, you'll probably be limited to the biggest and most established cryptocurrencies on the market.
So first up, let's take a quick look at Coinbase. Coinbase went public in April of 2021 and was the first major listing of a cryptocurrency stock. Many saw this as a huge moment in the crypto space, adding another notch in crypto's belt on its journey to becoming a legitimate currency. For the beginner investor who just wants to buy some crypto and then forget about it, Coinbase is likely a good choice. And what are the pros and cons of Coinbase? So firstly, the pros. Coinbase is a very simple and clean interface. It offers most mainstream coins with more than 25 cryptos to buy. It offers easy transfers and withdrawals. It allows you to send your crypto to other platforms if you wish. And lastly, Coinbase is now a publicly traded company, and as a result, it offers more transparency to investors, and we can really see behind the company Coinbase and what it does. And then what are the cons of using Coinbase? Well, when compared with competitors, Coinbase's fees are relatively higher, but if you are using the Coinbase Pro platform, which is a more complex platform, the fees are reduced. And then generally speaking, there are just less coin options on the Coinbase platform, at least at time of recording. So as mentioned, the interface on Coinbase is really intuitive and simple to use, especially for investors who are new to the cryptocurrency space. We'll be doing a full video on a Coinbase account setup and how to trade on Coinbase in the near future, so do stay tuned for that video. And at the end of this video, if you haven't yet opened a Coinbase account and you're interested in doing so, we do have a referral link in the description that will help us out if you use it. Costs you nothing, but again, completely optional. If you want to just Google it yourself, all good.
Now let's take a look at Binance. Compared to Coinbase, Binance has a lot more advanced features and functionality, but this may appear quite complex and confusing for a first-time user. So, what are the pros and cons of using Binance? Well, first, let's start with the pros. Number 1, there are over 500 tokens to trade on Binance, and they are constantly adding more and more. Number 2, there are free bank deposits to fund your account, and there's only a small fee if you use a card. Number 3, there are very low trading fees, and this can be further reduced if you hold BNB coin, which is the native Binance token. Number 4, it offers advanced crypto trading tools such as DeFi staking and liquid swaps. Also, it's important to note that these are high-risk products and we'll be talking about them in a future video. Number 5, they have Binance Lite, and this is a more simplified version of the app, and we'll be talking more about it later. But what are the cons using Binance? Well, number 1, it can seem quite intimidating for a first-time user due to all the complex features that Binance offers. Number 2, the platform has less oversight and transparency and is actually not regulated in the United States. And number 3, the main Binance platform is not available in the US. There is a more restricted version available, but you don't get all the functionality. As mentioned before, Binance offers a Binance Lite function, and this is basically a simple interface for beginner users. As you can see here, this is a way more user-friendly view for the beginner investor. Do note, however, that when in Binance Lite mode, some coins won't be searchable and some features won't be visible. However, you can always switch back to the main app at any time.
So you bought your crypto, but now what next? Where do you keep them? There are a number of ways of holding your crypto assets, and they range from relatively risky to relatively safe. It's generally recommended to keep your funds in a crypto wallet. A crypto wallet is essentially a digital bank for your cryptocurrency, and a wallet can either be a hot wallet or a cold wallet. And what are they? Well, a cold wallet is simply an offline wallet, or in other words, one that is not connected to the internet. These generally come in the form of a USB style key that you can plug into your computer and access your crypto funds that way. A couple of leading brand names in the cold wallet storage space are Trezor and Ledger. And why would you want to keep your funds in a cold wallet? Well, essentially, because they're not connected to the internet and are essentially offline, that means they are less prone to hacks than, say, crypto exchanges or hot wallets might be. Cold wallets are simply the safest way to store your crypto. On the other hand, however, as mentioned, a hot wallet is connected to the internet. If you hold your coins on an exchange or on a wallet connected to the internet, you're essentially using hot storage. This is more risky as your funds could be hacked or the broker that you use could go out of business and you lose access to your funds. Some hot wallets that you might have heard of include Exodus, Electrum or MetaMask, but it's also worth noting that if you're holding your funds on the Binance exchange or on the Coinbase platform, you are also likely holding them in a hot wallet. That being said, some of the bigger exchanges such as Coinbase and Binance do offer certain insurance on the tokens that are held on their platforms, but we'll save that for another video.
One question that we get a lot is, how much should you invest in crypto? So, unfortunately, there's no right answer. It could depend on multiple factors. This could be your risk tolerance, your age, your temperament, your financial status, your number of dependents, a whole bunch of things.
So in short, like with most investing, but especially with crypto investing, only invest what you can afford to lose. This statement is thrown around a lot, but what does it really mean? Well, we don't invest with the idea that our funds are going to completely go to zero, as one, it's unlikely to happen, but it's certainly possible. The important thing to remember is that you need to be comfortable knowing that there is a risk that your investment could go to zero. So you don't want to be left in financial ruin if in the unlikely event that does happen. We really need to reiterate this with crypto investing especially. It's a new industry, it's quite untested, it's relatively unregulated, so there are a lot of other factors at play when compared to traditional stock investing. If your funds are hacked, you lose access to your private key, or any other number of factors, there might not be that customer service number you can ring to be like, hey, I need my money back. If you lose those things, your funds are gone. This is the price you pay for decentralization. You get full control of your funds, but you have full responsibility.
So, to return to the question of how much you should invest in crypto, there's no right answer. Generally speaking, most experts recommend around 0 to 10% of your investable funds. Those who have a higher risk tolerance can aim towards the higher end of that scale, but if you're going to lose sleep over it, invest on the lower end or else 0. The problem is, you hear of many people who have made lots of money on cryptocurrencies and you think, why didn't I put more into it? But the stories you hear far less about are the ones who lose a lot of money in crypto, and these are far more common than the ones who make those massive gains. The last thing you want to do is use all your savings or some of your borrowings to invest in a cryptocurrency that goes to 0. When the prices go up, you'll wish you'll have invested more. When the prices go down, you'll wish you'll have invested less. That's the name of the game. All right, let's talk investing strategy.
And to be honest, this part's probably going to be a little bit shorter than you might have hoped, and let's explain why. We can't reiterate enough that investing in cryptocurrency is still highly speculative, and there's a reasonable chance that many, if not all, cryptocurrencies could end up worthless. Investing in crypto isn't like investing in regular stocks. You don't have the usual metrics like price to earnings ratios, price to sales ratios, or any of those traditional financial metrics. Most crypto projects don't sell products or services like traditional stocks, so you can't value them the same. That being said, there are tons of ways you can value cryptocurrency projects, but just as a high level, we'll give you a couple for beginners.
Number 1, read the white paper.
And the white paper is basically like the S1 document that you might be familiar with traditional stock investing. It basically gives a roadmap for what the cryptocurrency wants to do and the project as a whole.
Number 2, research the team.
Who's behind the project, what's their background, and what are they trying to do?
Number 3, identify competitors.
Once you understand the project and what they're trying to do, you'll probably notice that it's quite similar to other projects that you've researched before, and you've got to establish how do they set themselves apart from the competition.
Number 4, token utility.
It's important not to buy a coin just because you think the price is going to go up, because essentially that's just gambling. You want to try and ensure that the coin you're buying has purpose, or in other words, utility. As we mentioned earlier, Binance's native coin, the BNB token, serves as a way for traders to reduce their fees for buying and selling on the platform, i.e. it has utility.
Number 5, market cap.
So a coin's market cap is essentially the hypothetical cost that it would cost you to buy every coin that's in circulation, and it's a great indicator of the project's size. Market cap can be used as a great indicator for a project's growth potential. We did a video on market cap from a traditional investing lens, but a lot of the stuff in that video is still applicable to what we're talking about, and you can check that out here.
If you want to get some more detailed info on this, we highly recommend checking out Binance Academy or CoinMarketCap's Alexandria. We'll link it in the video description, but it's a free educational resource that Binance and Coinbase provide, and is super helpful as a learning tool for crypto investors.
So in short, as we've already mentioned, just invest what you can afford to lose.
If it goes to the moon, great. But if it goes to zero, you're not in financial ruin. Let's talk taxes. So in Ireland, at the time of recording, cryptocurrency is currently taxed the same way that stocks are.
And all that means is Revenue haven't introduced any crypto-specific regulations when it comes to taxing cryptocurrency, so they're taxed the exact same way as stocks, i.e. 33% in most cases. What is capital gains tax? Capital gains tax is the tax you pay on any gains or profit from your investments. And yes, that includes crypto. We have a full video on capital gains tax in Ireland, which you can check out here. And although that's done primarily through the lens of stock investing, most of the rules are applicable to crypto.
We've had a ton of questions on TikTok and YouTube about taxes in relation to cryptocurrencies, so we're quickly going to do a quick fire round to answer most of those questions.
Do I have to pay taxes on my crypto gains?
Yes. Like stocks, if you make a gain on your cryptocurrency, you have to pay CGT. At the time of recording, CGT is taxed at 33%. And just to reiterate, everyone pays this amount, regardless of your job status, your income, your wealth, whether you're a cat, whether you're a millionaire, it's 33%.
But what if I'm...
Everyone.
Can I avoid paying tax on my crypto gains?
In short, no. Not legally anyway. However, remember, you can reduce the amount of capital gains tax that you pay with the €1,270 annual exemption that we get in Ireland. However, it's very important to note that this exemption goes across all of your gains. So this includes stocks, cryptos, properties. All of it counts towards the €1,270. So, for example, if you made €1,000 profit on crypto in 2021 and also made €500 profit on your stock investments in 2021, your total investing profit for 2021 would be €1,500. €1,270 of that profit is tax exempt, so your taxable gain is actually only €230. Therefore, with CGT at 33%, your tax bill is only €76.
But what happens if I simply don't declare the taxes? How will they know?
Steve, I've already told you, that's illegal. Just as a quick reminder, when you signed up to your broker, you gave them your tax identification number, your bank details, your address, your ID, so they do know you. So it's not going to be that hard to find you. If you are ever audited, there will be a track record of all your transactions.
It's not going to happen to me though.
Maybe, but they're going to catch someone.
And do I need to pay CGT myself?
Yes. CGT is self-assessed. This means that it's your responsibility to pay and file. For most people watching, you'll pay your income tax through PAYE, and this will be deducted from your wages as you're paid from your employer. However, with capital gains tax, you have to actually pay revenue yourself. And again, it is your responsibility to do that.
I see. And how do I pay and file capital gains tax?
You're in luck. We've actually done a video on capital gains tax, and although this focuses more on stocks, all the principles are the same for paying capital gains tax on cryptocurrencies. You can check out the video here.
Woo! That was a lot of info to take in.
And there's plenty more. So we've left loads of resources in the description below. Make sure to check it out if you want to find out more about cryptocurrency investing.
And of course, as we said at the top of the video, if there's any aspects of cryptocurrency investing that you want to see in more detail, do let us know in the comments and we'll be sure to cover them in the next video.
If this video helped you out, please make sure to hit the like button.
We release videos every week, so if you want to see some more, make sure to subscribe. And otherwise, see you in the next one. Woo! That was a lot of info. I forget what first.
So did I.